Good afternoon, everyone. Jack McGrath at ThinTmarkets.com. Well, it's Friday. It's been a long week. It feels like there's a few things that you got to pay attention to here going forward next week. Definitely the market is mixed, and it's been bouncing around off of rumors, rightfully so. So maybe that's going to come to fruition, but there's certain levels that I think you got to pay attention to. In the 5-year and the bonds, it looks to me like you have bullish pennant formations with the gap higher, and then you have the sideways trade has built this, well, it looks like a pennant if you draw the lines in off the highs and the lows. So on the upside, the level in the bonds that we want to pay attention to is at 143.31, which you've had basically three highs up there, 31, 29, and 31. So if you started to get above there, you could start to form some objectives much higher. I think the objective off of that particular pennant formation or the flag is around a little over 3 points higher. So above there, that will take you basically into the 147 handle objective. Now, you do have an old level at 144.03. So just because it starts to trade above there, I mean, granted, I think you had stops above there, you probably can make money, but what you want to see is the market start to hold above 143.31. Then I think you could really look for that next leg up. But there's a lot. We've seen this market moving around. Today was a good example. You see something on the tape, and then you see everything shift the other way. That's what happened today. The bonds actually came down to 04 and then bounced from there. But those are now on the downside. You got quite a bit of levels of support that you want to pay attention to. Bonds, we have that 143.07, which is a 61.8% retracement on the way back up, but now we're coming back down to it. It should provide, that 07 area should provide some support. Even though we went down to 04, what you're looking for is the market to continue to stay above that on a closing basis. 04 was the March 20th close, and that was today's low. Below there, I think if you start to get below this 07 to 04, you're looking for 22 to 18, 142.22 to 18, and then below 18 we have that from 142.10 down to 142.02 gap. So really you want to see the market below 142.02. If we started to take that out, then you could look for more downside. If you start to get above 143.31, start closing above there, look for more upside. So we're stuck in that range, even though it's a pretty, decent sized range from 142 to 144, but the market's having a hard time getting above or below, so we're basically trading sideways. 10-year, same thing. If you look at a 10-year chart, 2 weeks ago we had the dominant candle down, outside range candle with a very a close on the lower end of the range, and then the last 2 weeks we've grinding our way back up towards the upper end of the range. So we're stuck in that range. 10-year note, you're going to be watching 131, 23 and a half, 24, then you're looking for 132 even and a half again, and then below support you have 03 and a half, which is the March 18th low and today's low. And then below there, 131, I don't know, the 61.8 retracement's 131.08, and then below there you have 02 and a half, and then you have the gap from 02 and a half down to 130.30. So all of these levels you got to pay attention to. Yeah, we're stuck in the range, but it feels like the way these pennants look on the treasuries, I think if we started to see an up trade from here, you could see the launch type of trade off of that flag. So that's it for now. have a nice weekend. Like I said, happy Friday, and we'll see you next week. Jack McGrath with NTMarkets.com. Thank you.